Well, hey, everybody. It's Arlissa, educator to trader, and I am here on Wednesday, May 21st to do our daily trade recap. Today, I took a loss. Oh no. I know exactly what happened. I'm going to talk through exactly what happened. I'm going to share with you what went on so you won't make the same mistakes and you'll do better. That way you won't have the same issues because I know I won't have these same issues again. All right, let's get into it. Let's get into it. Oh, I want to share though, before I get too deep into the process, I want to share with you that even though I took a loss today, everybody in my community didn't take a loss. So I want to share with you some of the wins that happened in my community either way. So here we go. We've got one member who says SPX call credit spread 58.95, 5900 PDT hack profit $200. Woo woo woo. We'll take it. We'll take it. We'll take it. Take it. Take it. Another member shows us their screenshots of the different places, different trades. Great day on SPX plus 1600, subtract 335 on the XSP trade that got breached. But the net was $1,200. We'll take it. Actually, it's 1,200 and some change when you do the math. We'll take that too. Positive. We take all the green in the membership. All the green is green. And then one last, we actually had several people who had profits. I'm only sharing two or three of them. Entered at 954 PDT hacked at PCS 58.90, 58.85, profit $60. I just want you to know that sometimes we have $50 and $60 profits, and sometimes we have 1,200. It really depends on which level of trading you want to be. Everybody's not going to necessarily make thousands. Everybody's not going to make 10 or 15, but all the green matters. It really comes down to where are you trading? What is your level of trading? What is your level of collateral? Your level of risk management and risk tolerance. Everybody trades at whatever level they're on in the membership, but we're trading very similar things. It really comes down to how much and how big you want to trade. Every individual person is there. Everybody doesn't have to have a big account. You don't have to have a small account. We're all working at whatever level you're at. All right. So let's go ahead and get into my trade recaps for the day, and so I can share with you just how I ended up with losses today. All right, so here's the chart. The first thing we did was did our trial trades. I did my trial trades, which about 9:45, I look at the gamma chart, and I'm going to bring the gamma chart over so we can take a look at the gamma chart. I bring the gamma chart, I look at that to see where are we. Now, the gamma chart at 9:45 is kind of mixed. It's kind of level as far as the green and the red. What was concerning, and it should have been, giving us a little bit of a pause, is you got the 58.75 is a really big red candle. So I did keep that in mind, and I actually went below that big red candle on the negative gamma side. Price is at the flip zone right between the red and the green. I went opposite the big greens and opposite the big reds and got into some trades. So my first trade this morning at 9:41 was 58.70, 58.75. And that was a put credit spread. Now, this trade in itself was going to be fine. It was a fine trade initially, and I'll tell you why it was a fine trade or going to be a fine trade. But let me just continue with what I did for trade 2 and trade 3. So at 9:40, I did trade number 1. I had 3 contracts here, and I received $90 for these 3 contracts. All right. So then around the same time, so maybe 4 or 5 minutes later, I did a call credit spread number 2, which would have been 59.40, 59.45. I had 2 of these contracts, and I received $95 for these. All right. That's 59.40, 59.45. Let me squish this a little bit so we can see a little bit better. And then I'm going to move the 3 up here because that went a little bit higher. Okay, so at the second trade at 9:46, I did that next one. And then I went just above there. It literally like the next minute, I went to 59.50. 59.55 call credit spread. I should put call credit spread down there. I only did one contract here. Initially, I ended up doing another contract there for more money at those same strikes. But basically right here in a short period of time, I did these 3 trades. This all happened before 10 o'clock. All right. And then I added on to the 59.50, 59.55. Notice how the price is just kind of chilling out here. We did break to the upside out of the opening range. I look at opening range breakout. It kind of stayed in the opening range all the way up till about 10:45, and then it broke out to the upside. While it was up here in the upside, this is when I had the 58, 70, 75 put credit spread, and I had the PDT hack working. This is where the PDT hack was supposed to be doing its good work, and it was. The PDT hack was doing its thing. It was set and really to do its job. I had it set for 495. It got up to about 480. It got up to 480, and then I made the major mistake that no trader should make when you're working with this, even though we're doing credit spreads and we really just need the time to elapse. But what I did was I stopped looking at the chart. Okay, mistake number 1. Okay, all the mistakes are the things that you don't do as a trader. First thing I did was I stopped watching the trade. That's the mistake I made right there. While I was still waiting for this PDT hack to fill, I stopped watching the trade. That is not a good move, right? I started moving around. I started doing some other things. I'm actually on vacation, so I moved from one spot to the other. I moved away from my computer, started moving around. Then while I was engaging into a conversation, I saw a message from somebody in our community that the price had fallen, and they were like, "Oh no, the price fell and I didn't get my PDT hack locked." So the price fell to like 58. I think it was like 50. That should be 8. 58. I want to say it was 58.80. It like fell to 58.80. And I was like, well, let me just give it some time, see if it recovers, see if it holds up, yada, yada, right? Now, my trading plan says that if my sell leg gets touched, that my trading plan says that I am going to close the trade, right? So my mistake number 2 was didn't close the trade when sell leg was touched. Basically looking to see, well, I hope it'll come back. Maybe it'll come right after this big drop happened. So now the question is, what happened in this big drop? Well, that big drop came with the 20-year bond auction. The 20-year bond auction information came out. We found out that the bond information is not where it needs to be. That's not giving us good vibes as it pertains to where we are in the economy, right? We're not getting good vibes here. Okay, so I do have some information as to what actually happened at the 20-year Treasury bond auction. So at the auction, the government was holding their auction, and they wanted investors to basically lend them the money for the 20 years. But the investors demanded over 5% in interest in order to lend them the money at the bond auction. That is the highest level in over a year. Basically, the investors are like, yeah, we'll buy bonds, but you're going to have to pay us 5% in order for us to lend you our money to do the bonds. The highest level in over a year. So why does this matter? This matters because, and I got this information from TJ the trader. I'm not acting like I got this resident knowledge, because I don't. I'm passing on information from the economics people, which is TJ. When investors demand higher interest to buy government bonds, it means they don't trust the current price or they don't see enough reward for the risk. The lack of demand is a red flag. It shakes the confidence in the overall system. And when bond yields or interest rates jump like this, it pulls money out of the stocks. Big investors say, why take the risk in stocks when I can get 5% locked in for 20 years? Okay, so basically the bond, they say, okay, I'll lend you my money for 20 years, but I want 5% out of it. And if I can put my money into a bond for 5%, then why would I take the risk of stocks that may or may not perform at 5%, may perform, like SPX performs higher than that, but that's more risky. Well, if I can get 5%, well, my money just sits still for 20 years and that's a guaranteed 5%, then why not? Let it, if it's comparable to something in the stock market that's not guaranteed, then why not just go with something that's more guaranteed, that's on par? So because the economy and the nation didn't seem to like those numbers, this is why we got this major drop that happened here. Market just dropped, fell all through, and then there went my trade, because I did not have 58, 70, 75 locked with the PDT hack, which is what I was trying to do, and should have locked it at 480 before it started falling. I could have gotten, I would have had a profit. 480 would have still been a profit, and I would have had it locked and I wouldn't have had to worry about it. But since I did not lock it in, I left this trade wide open for what happened. I had this trade in Thinkorswim. I also had a very similar number over in Robinhood. So there went that. The mistakes. I stopped watching my trade, first of all. Second of all, when the price fell through my strike, I didn't close the trade because I was hoping that it would come back. Basically, come to find out, if you saw my post today, you saw that hoping is not a hedge. You don't hedge with hope. If you have a trading plan, which I do for risk management, and I do, then you need to follow what it is you have, because I could have closed the trade then and then repositioned and put on other contracts and made the money back, which is why I have the plan that I will close when my sell leg is breached, because I can go and put on more contracts someplace else and mitigate the money. So when it was all over said and done, I had a loss today and I was not happy about it. But even though I wasn't happy about it, I at least know what happened. I know what I can do to mitigate that loss. I know how to manage it in the future, and I can make it do what it do. We can continue to trade. I see that the people in my community still made profits. It wasn't just me. Some other people had losses as well. So some people had wins, some people had losses, which is the way the market really plays out, right? That's the way it goes. But I want you to know the membership, the Option Seller Zone membership, is open, and it's open for, let me get us a note here. It's open until the end of the month at the current price. Current price is $97 a month. And then on June the 2nd, it is going to go up to another price. So if you're trying to get in and be grandfathered in at the current price, if you really want to come in and trade SPX and trade XSP and SPX with us every day, then you need to come on and join the membership, all right, at the $97 a month price point. Option Seller Zone membership, $97 a month, bit.ly/E2T-membership. You've got till the end of this month to come in at this price point, and then it's going up on June the 2nd. Alrighty. All right. Well, that's our recap. Be sure to like and subscribe, and we'll be back in the market tomorrow. Basically, we don't trade to revenge trade, but we go back with, it's a new day on the market. We trade what we see, and we go back and make our profits all over again. Alrighty. I will see you all in the market. Bye, everybody.